Hey everyone, BC Richfield here on behalf of the Burbs Nest, where we teach you how to trade. Today we're going to take a look at Fibonacci retracements, how we can pick targets from them, all right, and entries, but also how we can use them to measure strength in a trend. We're going to start by selecting our tool, which we can see over here on the left toolbar. As we click on here, you can click the little arrow, you can see Fib retracement. Okay, that's what we're interested in. You'll notice how I've got a star next to it up here. You can flick these stars on and off, all right? And then what it does is it puts it up here on your fast menu, all right? And you can turn that on and off by the little star in the bottom left-hand corner. So with that selected, what we're looking for here are significant highs and lows. Now, sometimes these can be tricky to spot, okay? So if we start up here, I think we'll say that high there, okay? And then this low down here. And then we would take this high up here. Now, this is where it can get tricky. Sometimes you've got kind of a little pullback here, yeah? So if we make an allowance for that one, we'll check it, see how it goes, in which case we would then have to take that as the next significant high and that as the next significant low, okay? So I hope you're all following along at this point. The key is what we're looking for key highs and lows in a trend, yeah? Like so. And obviously, as we know, we ideally want to be trading with the trend. So we're going to turn that off, and then we're going to take our Fibonacci retracement tool. So we want to take it from the very high of the move, in which case is here. And it doesn't matter if you click it a little bit before or a little bit after, as long as it's in line with the top of the candle. Now what we're going to do is we're going to trace this down, and we can see how it now meets the bottom of this move. So we're saying there's the top, there's the bottom. And if we drag this across, what we're looking for here is engagement with one of our key levels. Now, what you'll notice on my fib setup is I've got the 1 on there, the 0. This yellow, these two yellow lines here, the 0.66 and the 0.618 is known as the golden zone or the golden pocket, okay? This is one of our key target areas in order to find a kind of market reversal. So as we can see, price, as it's come back down here, has come back to this, hit the golden zone or the golden pocket, and then it's sold off. The other levels we've got are the 0.5, the 0.382, 0.236, all right, which are the key levels, and then back to our 0 line here. So I'll run through what these levels mean more when we're looking at strength development and measuring that. So what we can see straight away, this is in terms of selecting targets and picking entries, is we've got our high, we've got our low, price comes back up, hits the golden pocket, and then reverses. So the way that people trade these is you'll have people that will put limit orders in here, or stop limit orders, wait for them to get triggered. Often when we do this, a standard kind of point for a stop loss would be here, which is in between the 0.786 and the 0 level. What this allows if we've got any swing failure patterns or liquidity grabs that come off and then go back down. But as we can see here, we didn't get anywhere near that. Other people like to trade this in terms of seeing it as the reversal as we then get back into market structure. So what you'll notice here is we've got our high, got our low. This sets the lower high, right? But then as this comes back down here, people would wait for this low to be set, the next lower high, which is here, and play a candle such as this bearish engulfing candle here as the entry, in which case you would have your stop loss above the swing high, which would be here, okay? So let's take a look at the next one. Now, as we said, sometimes it can be tricky picking these targets, and we've said to ourselves, okay, we're pretty confident that we've got this. We can see a clean low and a clean high. So what we do once again is run it from there to there. And what we can see this time, now bearing in mind that we're measuring this against the trend, right? So we're using this almost in a way to confirm whether we're going to see some kind of market reversal here. we get the high, we come back into this level. What we can see here is price starts to consolidate in between the 382 level here and the golden pocket before it then shows weakness and sells off below. So we can use this in a way to get confirmation and say, okay, well, we think the trend might be reversing here. Well, if we come down and we take this as setting the low, which would be a higher low compared to this one, then we'd want to see price break out here and take these highs, in which case then we could be confident that we're seeing some kind of reversal pattern emerging. However, we don't get that, but by using our Fibonacci, we can see here by the weakness of the reaction in this zone and the failure to set a higher high, that we can be fairly confident that the downtrend is going to resume. So this one is a little bit questionable because it's in such a tight range, okay, but I just want to show it to you in order to how we can use this again as part of our confluence, all right? So as we took that from the low to the high, when we're looking for bullish trends, we're taking it from the low to the high. When we're looking for bearish confirmation, we're taking it from the high down to the low. So now we're saying, okay, if we haven't seen the reaction that we wanted there, if we trade this from the high now down to the low, okay, and get that on there nice and neat. So that's this high here down to this low. We can see as price comes back up into here, it doesn't even reach the golden pocket, right? But look what happens at the 0.5 level. Look at these long wicks to the upside. So once again, we can say to ourselves, price comes down, has been rejected here at one of our key levels. Okay, and a typical kind of zone for this that a lot of people will look for these reversals is here, all right? So between the 0.5, including the golden pocket, and up to the 786. So we've hit our 0.5, we've come up, we've set that high, the low, lower high, then on the lower low here, we can take this level for the micro low or the local low. Once we close below that here, we can then see the sell-off that ensues, okay? So we're using this as a form of picking targets and also giving ourselves confirmation of the trend bias. Now, this larger move down here, we've got this as our high, this marked as our low, all right? So once again, we're looking for bearish continuation here because we are in a downtrend. We're setting lower lows and lower highs. So we take the high here, we take the low down here, right? And what do we get? This strong reversal here is halted again at the golden pocket. We can see the reversal down to here. Again, you could have limit orders in there playing to the downside, or you could have this coming down. You could wait to set the low, set the lower high, and then you could use it on the break of this low to trade it down. Now, what we notice as we get down here is that price starts to reverse. So let me just clean this chart up very quickly. And I'll show you the other way in which we want to be using the Fibonacci's. So when we've got a trend like this, which is a very clear downtrend, okay? As we've said, high, low, lower high, lower low, lower high, lower low, so on and so forth, until we get to the point, right, that we get this high here, and we close above it here, and this confirms that we're then reversing the market structure. So how do we know if a trend's starting to run out of momentum? So this is where the Fibonacci tool can come in helpful again. So if we take our tool out here and we're measuring, and we say take this high, which is the start of the move, down to this low, we can see that the price, as we know, comes into the golden pocket, yeah? So that's showing that there's a pretty strong move happening to the downside. As we then measure the next levels, and we'll take the key levels here, from here to here, once again, we hit the golden pocket, so we can see that there's still strength remaining in that trend. Now, if we take from this high down to this low, what we can see here is that this reversed a little bit sooner. All right, this actually reversed off of the 0.5. So we can see how the trend is starting to compress a little bit. And then if we take this one here, all right, down to these lows here, we can then really see it come back up into the golden pocket here. And you can see by the distances that are created while we're on the way down here, which even if we take something crude like this, for example, and we're measuring from here to here, we can see the power of that trend. And then if we say to ourselves, okay, if we're measuring from here down to here, we can see that that's a little bit longer. Here to here becomes a little bit shorter, yeah? and then here to here becomes shorter still. So while we're using our Fibonacci tool, what we wouldn't want to see is extra strength. So for it to start rejecting from lower and lower levels down the Fibonacci, showing us that the trend is starting to gain a bit of momentum. So let's look at that very quickly on the upside. Okay. So what we can see here, if we just start by taking this low, we start by taking this low here to this high, we can see as we come up, we come back down, we hit the golden pocket. Now, we then take the low here up to this high, which is this high here before the pullback. We don't even reach the 382. And look how much stronger that trend is to the upside, right? So what we're saying is there's the trend here that's gaining momentum, or certainly sustaining a higher momentum. So then we want to measure the trend again from here to here. Now what we can see is we've gone straight through the 382 into the golden pocket here, and drag this across a bit more. Now price is starting to consolidate down here. So we can see that it's starting to show weakness, because look at the difference between this move up here and then we get this strong move up here. Price comes down, fails to get that momentum and go to the upside and starts to break down. So we can then either take this on board that we've got this as a point of consolidation, all right? So price is starting to compress before a move in either direction. But the Fibonacci really helps us ascertain that, okay? So by using Fibonacci's and simple market structure, we can see how we can use it to help us pick entries, but also manage our trades by looking at the trend strength as we go through. So I hope you got value out of the video. Guys, there's some free links for you down there to sign up for a free trial at the Bird Nest, where we cover this and other stuff in a lot more detail, as well as promotions. And if you want to at any point, please do stop by the Nest, come and say hi, have a chat with us. It's a very, very welcoming environment. And if you've got any questions, you can drop them straight to us and we'll be on hand to answer. Have a great day, and I look forward to seeing you soon.